Wells Fargo posts fourth straight revenue miss on mortgage issues. Reuters, Wells Fargo Co., WFC.N, reported a 19% profit decline on Friday and weaker revenue than Wall Street had expected for the fourth consecutive quarter due to mortgage issues, sending its shares down 3.5%. The third largest U.S. lender, which has been embroiled in a prolonged scandal over its sales practices, said the dip in earnings came largely from a $1 billion accrual for a legal settlement over issues stemming from before the 2007 to 2009 financial crisis. But revenue at the bank also suffered from a decline in mortgage banking revenue. Wells has been trying to bounce back from a scandal over dishonest sales practices that led to interrogations by U.S. Congress and fueled the ire of millions of consumers. Wells Fargo's earnings dropped to $4.6 billion during the third quarter. On an adjusted basis, its profit was $1.04 per share, scraping past estimates of $1.03, according to Thomson Reuters I/B/E/S. Revenue fell 2% to $21.9 billion, hit by a 37% slump in mortgage banking. Analysts had forecast revenue of $22.4 billion. Its shares fell 3.6% to $53.30 in early trading. Wells Fargo's operating efficiency ratio, which measures expenses as a portion of revenue, was 65.5% during the quarter and 63.1% year-to-date. Expenses have been a key issue for investors, and the bank has targeted a full-year ratio of 60% to 61% in 2017, aiming to improve to 55% to 59% next year. Wells is committed to its plan to cut costs by $4 billion by the end of 2019, half of which will be reinvested into businesses, Chief Financial Officer John Shrewsbury said in a statement. Net income in Wells Fargo's community banking segment, the largest of its three major businesses and the one most directly impacted by the sales scandal, was $2.2 billion, down 31% from a year ago due to the legal charge. Wells Fargo is the largest U.S. residential mortgage lender, making more than $98 billion worth of loans in the first half of the year, according to trade publication Inside Mortgage Finance. That is nearly double the total for J.P. Morgan Chase & Co., JPM.N, the number 2 mortgage lender. Wells Fargo has been keeping a greater share of the mortgages it makes, boosting loan growth. Reporting by Sweta Singh in Bengaluru and Dan Fried in New York, editing by Lauren Terrella Capra and Meredith Mazzilli.